You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means we are back once again. It is Thursday. It is time for TWIFO, This Week in Futures Options. My name, of course, Mark Longo from the THEOptionsInsider.com. Hope you're having a good trading week. Couple things to remind you of right here, out of the gate here. First off, if you like what you hear, throw a like, a star, a comment. It does help new people continue to discover the content out there. And if you want to discover more content in your lives, and who doesn't, theoptionsinsider.com/pro. The place to go to learn more, get access to your own exclusive podcast feed with not one, but two exclusive new shows, early access to a bunch of stuff, giveaways, and a whole bunch more. theoptionsinsider.com/pro. The place to go to learn more as we learn who's joining us on the old program today. I'm pleased to welcome back our old pal, Mr. Dan Gramza from Gramza Capital Management. Dan, welcome back to TWIFO, sir.
Well, thank you very much, Mark. Another exciting day in the market. Can't wait to take a look at some of these with you.
Yeah, you picked a hot one, Mr. Dan. A lot to talk about. All right, without further ado, then, let us kick it off with the movers and shakers report.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers Report.
All right, everybody, let's check out what's moving and shaking, rocking and rolling over there at CME Group this week. If you want to see this report for yourselves, give us a follow on the old Twitters or follow CME. We both put it out right before showtime. And if you did that, listeners, you would see that we are pretty much biased towards the green on the full panoply of trading offerings over there at CME. I'd say we're pretty much maybe 65-35, maybe even 70-30 green over red. We also have the largest percentage movers this week, lighting it up to the light side. I'll let you hazard a guess what you think is the largest percentage mover this week, listeners. Think it over in your own brain as we run it down here with Mr. Dan. Dan, you think you could run down the light side and dark side for the folks this week, sir?
Be my pleasure.
All right, sir. Have at it. The floor is yours.
Okie doke. Let's start with the light side. And we're going to start with number 5, and that's feeder cattle, up 4.42%. Number 4, gold, up 4.71%. Bitcoin up 11.46%. Now remember, last week, that was number 1 to the light side, and that was up 15.79%. I would imagine a lot of people are expecting that to be at the top of the list this week as well. But palladium is number 2. That's up 13.05%. That was number 1 to the dark side last week at minus 9.47%. Number 1 for this week to the light side is Nat Gas, up 15.09%. Now, it was number 2 to the light side last week at plus 5.60%. And not too surprising when you think about what's going on in that complex. So that is the rundown on the light side.
Well done, sir. Some surprises there. I think you're right. A lot of people probably were coming in here today expecting Bitcoin to take the light side throne, but no, sir. Nat Gas, man, managing to elbow it aside yet again, sir. Are you surprised?
Well, no, because there's some interesting things going on in Nat Gas. And Bitcoin, who knows? You never know about that market.
That is
For
true.
it to pop right up there, that would be a very reasonable guess when you think about the movement in that market as well.
Maybe if we ran these a little bit later today after Gensler got shown the door, then maybe that would be a different story. But I digress, sir. All right, sir, take us to the dark side if you can handle it.
Okie doke. Dark side. We'll start again with number 5, soybeans, minus 1.06%. That's down a bit. Number 4, 3-month SOFR, that's down 1.36%. And the Nikkei yen is down 1.85%. Lumber is number 2, and that's down 2.76%. And number 1 to the dark side is soybean oil. That's down 5.43%. And last week, it was number 2 to the dark side, being down 7.68%.
All right, Mr. Dan, well done. I will give your voice a rest now, sir, as I run through the CVOL movers and shakers, listeners. And you could find these for yourselves, listeners. Just type CME and CVOL into your browser of choice. That'll get you to the dashboard. But once you're there, listeners, set the high-low range to 1 week, and then we're going to go for, I like a good, make sure you select the aggregates as well. That's also going to show you, you don't want to see everything. You want to see the aggregates for each complex. Unless you want to go deep into one, then hey, have at it. Then I like a nice ordered list, but to each your own in terms of that. At the top of our list, our ordered list this week, listeners, we have the energy CVOL. Again, this is going to order them by today's move, not the net overall value. 62.43, so getting some juice back in energy vol, up nearly 1.5 points just today. That is also the high for the week, the low 56.96. In fact, that's going to be a theme for most of our CVOLs for this week, listeners. Pinning the needle to the upside this week. So everyone was saying vol is dead. Maybe listen to the show this week. Below it, we have the commodities aggregate CVOL, 37.67, up nearly a full point as well, about 0.94. That is the high for the week, the low, 35.07. Below that, we have the metals aggregate CVOL, 18.89, up 0.88 just today. That's a pretty big move for metals vol, listener. That's also the high for the week. The low was 17.37. So far, we have energy, commodities, and metals all pinning the needle to the upside for CVOL this week. Can that trend continue? Let's find out. Let's go to FX below it, 8.09, up about 1/4 point today. So that's not a bad move for FX. That's also the high for the week. The low was 7.86. Below that, we have the ag products CVOL, 18.73, up about a dime, 0.1% out there today, listeners. That also is the high for the week. The low was 18.44. So far, we are 5 for 5, pinning the needle to the upside, listeners. Below that, we have the Treasury price vol, 6.93, off 0.13 today. So coming for a little bit of vol in the Treasury complex, even though that is near the high for the week. The high was 7.09, so right off the highs. The low was 6.48. And then below it, we have the Treasury yield vol, 118.16, listeners, off 1.19 points today. That is also pretty close to the high for the week as well. The high was actually 119.35. The low, 107.81. So to summarize, pretty much everything is pinning the needle to the upside this week, listeners, with the lone exceptions being the Treasury complex, and they're right off their highs for the week. So vol looking frothy. Mr. Dan, a lot to unpack, a lot of places we could go on the show today, sir. Where should we begin our journey this week?
Gosh, that is a tough one. There is a lot happening. Well, wait a minute. Let's start with energy. Shall we go to the energy complex first?
It's like we're on the same page, listeners. I also already have Nat Gas pulled up, listeners. To energy, we go.
It's time to tap into the deep options well of black gold, Texas tea, Nat Gas, and more. It's time to talk energy.
All right, listeners, you know where to go to find these reports, cmegroup.com/TWIFO, TWIFO. Once you're there, you probably have to log in if you haven't done so. And then that'll get you to our reports in that asset class list. You're going to go down 3 slots to energy. Then we'll kick things off in Nat Gas. It is our number one upside mover again this week. So lest you think we're just obsessed with energy on the show, don't blame us. The numbers dictate where we go. And Nat Gas elbowing aside Bitcoin this week, listeners. What do you want me to do? It's over $3 again, $3.30 out there in Nat Gas. So Nat Gas, they saw Bitcoin and crypto having all the fun. They said, hold my bear, kids, here I come. Nat Gas, that front future, one day to go, $3.30 out there right now. So looking hot, looking frothy. We are also ticking into that seasonal part of the year where we expect Nat Gas to be a little bit frothier, a little bit juicier, a little bit more volatile. And that is certainly bearing fruit right now. Also bearing fruit are the volume numbers, listeners. My goodness, Nat Gas. Usually you suspect it to see 450, maybe 500,000 contracts, 600 if it was a decent week, 800 maybe if it was really explosive. If you're really talking banger week, 1 million maybe. We're at 1.2 million contracts and counting already, Dan. So things are rocking and rolling in Nat Gas right now. What is catching your eye out there, sir?
It is indeed rocking and rolling. And excuse me, see, it chokes me up thinking about that. It's, excuse me. Yes, it is rocking and rolling. And we have that seasonal component to it. Also, we did have a drawdown in Nat Gas of about 3 billion cubic feet. And the expectation was for about 5 billion cubic feet. We've got weather conditions that put some pressure on this market. We have geopolitical situations that has an impact here, and we have the dollar. So let's take a look at those. If we look at it domestically, Nat Gas is a market that we have 3 primary areas that we use it. We use it to heat our homes and cook our food. That's about a third of it. We use another third for industrial use, chemical and steel industries, for example. And we use a third of it for electricity production. So those are our domestic demands that put some pressure on this. I think something else, Mark, that we want to keep in mind, and that is it's priced in dollars. And as long as the dollar is stronger, it has a tendency to dampen some upward swings in dollar-based markets. Gold, copper, crude oil, energy, the agricultural markets. You always want to remember that watch the dollar because it is a filter. And it is a clue about energy prices here as well as other dollar-based commodities. And then let's think about it globally, because now our production is a global market. Not that many years ago, we didn't have facilities to really ship Nat Gas globally. Well, now we do. And if you look at some of the areas, right now, Germany's come back and said, you know something, we're not doing too badly. They pay a hell of a lot for Nat Gas, but their storage is full. seems to feel somewhat comfortable with what's going on. We still have this terrible situation with Russia and Ukraine, and it doesn't seem to be dampening. It seems like everybody's trying to grab as much as they can before Trump takes office so they can go through maybe some kind of negotiation process. It appears that way, but it creates uncertainty. And that's part of what we're seeing here in Nat Gas. It's the uncertainty. What's also interesting is how we may be finishing up here on Thursday. As you said, we're around 330. But what's interesting is today we got up around 344. So we had a push up and we've cooled off a bit. Now tomorrow, Friday, are people going to be confident going over the weekend with Nat Gas? So does this back off? By backing off, I mean, does it close below 320? If it does, it implies profit taking. It implies a sideways move on Monday. This is not a bearish market, but how people respond to it gives us clues, I think, about longer term behavior here. So tomorrow's close, important. Do we close above 344? Do we close above today's high? If we do, that's a sign of confidence going into the weekend. People feel the uncertainties here and they're willing to hold on to positions. If we back off on tomorrow's action, that would determine whether we have a sideways move or lower possibly on Monday. So a very interesting market where it's positioned right now technically, I think. It'll be interesting, Mark, also to see what you can share with us on the options side. Where are people positioning themselves? And that's why I love what you do, because it gives us that additional insight into how people believe in this market.
Well, thank you for that, Mr. Dan. Let's see if we can find out what folks are up to out here, shall we? Like I said, 1.2 million contracts on the tape, listeners, so not exactly a quiet week out here in Nat Gas options. Nearly half of that 1.2 million contracts, 49.1%, going up in the D's contract that has about 4 days to go, so pretty near-dated flow, all things considered out there. By the way, you might be saying to yourself, what is the vol out here in Nat Gas? You know Nat Gas is the product that can really vie with crypto for the vol crown here on the show. And if you're looking at the near-dated stuff, like the D's contract, 4 days to go, yeah, you're back in triple digits on Nat Gas. Congratulations. 101.5, up a whopping 33 points on the week. Now, that's a 4 day to go contract. You know me, vol and such things, kind of a bit of a meaningless number. Let's go out a little bit longer. Let's go out, dare I say it, I don't know, all the way, a whopping 22 days, a little over 3 weeks. That vol a little bit saner, still frothy, but at a little bit north of a 76. That gives you a realm of where Nat Gas vol truly is. Of course, you go out into the seasonally quiet periods of, late spring, early summer next year, April, May, vol drops to about a 50 or a 48. So again, you can see where we're hanging out on the term structure there. In terms of skew, I guess we're going to hang out in the 4 days to go contract. That's where all you folks are playing this week. The puts last week, no one really wanted them. They're about 1.1% cheap. This week, even cheaper, but nearly 4% cheap. So folks don't want the puts. It's all about the calls. Last week, they were 1% bid. This week, 6.8% bid. So calls getting juicy with 4 days to go. And in terms of action, if you wanted yourself some straight upside in Nat Gas, then we got it for you here. The 3.5 calls expiring in 4 days, Dan, doing nearly 70,000 contracts. So yeah, the 3.5 calls alone, this one option doing probably about as much as silver is going to do in the options this week. So that shows you how much paper is going up in Nat Gas these days. It's not quite a 3-month SOFR, which if you want to deep dive into that, check out the futures rundown just from yesterday. We went deep into that. That's available for the pro folks now. I'll be hitting the on-demand side, the network, next week. But yeah, nearly 70,000 of the 3.5 calls expiring in 4 days. The big day is today, 23, almost 24,000. That's against an OI of 28,000, so they could be taking some off. After all, three half, it's a bit of a ways to go still. 19,000 on Wednesday, opening there. 17,000 on Monday, also opening. The quiet day, in air quotes, only 8,200 going up on Tuesday, slightly closing. I don't know, Dan, 3.5 calls with 4 days to go. Is that a bit of a bridge too far? Or, hey, we're up 15% this week. What's another 20 cents in 4 days, sir?
I don't think it's impossible. It goes back to the belief on the uncertainty of what's going on here. We have a potential increase in demand domestically. We have the uncertainty geopolitically. And it depends also on the dollar. We mentioned that, if the dollar gets a lot stronger, then we look for this maybe not to get up there. But if that stays about where it is, I don't think it's out of the realm that in the next few days we could hit that 3.5.
Well, if you're dubious on those, or maybe you like those, listeners, allow me to present right behind it 53, almost 54,000 of the 4 calls. Again, Dan, these are expiring in 4 days. We're at a 330 right now. They did, like I said, nearly 54,000 contracts. 40,000 of that going up today, Dan. 39,000 and change. That's only 23,000 open on the strike. So people are opening with 4 days to go on the 4 strike. I'm also looking, it doesn't line up with today's paper either, unless they are closing today, which they could be on the 3 halves, and then rolling to the 4s. Because that about 23,000 of the 3 halves have traded today, and about almost 40,000 of the 4s. So not quite 1 by 2, but pretty close. That would be an interesting choice if you really are feeling the animal spirits if you were going to do that, Dan. Take off the 3 halves and roll to the 4s with 4 days to go. Of course, if you're doing it the other way, if you were short, getting a little spooked, you're still not getting a lot of juice for those 4s. So I don't know, Dan. How about the 4s with 4 days to go? Somebody putting up 40,000 of them just today.
It's a little too optimistic for me. I don't see, unless they are doing a roll, but even if they do that, there's times not on their side. And to expect, almost a 60-cent move or 55-cent move in 4 days. For this market, though, we want to remember, not impossible. Volatility is indeed a friend of Nat Gas. It can be. And I still think that's way too optimistic in 4 days. It would take something dramatic to change. And I think right now we're at a steady state when it comes to fundamentals.
All right, Dan, let's dial it back to earth a little bit here. What do you say? We're getting wild. We're getting crazy. 4 calls with 4 days to go. How about if 4 is too wild for you, 3 halves a little bit too rich for your blood, listeners? How about the 3/4 calls? Again, this is all D's, all expiring in 4 days. This is where all the paper is going up this week, listeners. Nearly 50,000 of these trading this week as well. Big day for these yesterday. 18, almost 19,000 going up yesterday, mostly opening there. 12,000 on Monday, slightly closing, about 9,000 on Tuesday, also opening. 7,300 today against an OI of 24,000. So looks like some back and forth action on these throughout the week, which again makes sense. They were an out of the money, now an in the money call. So you're going to see some folks maybe taking some profits or roll into other strikes. Speaking of rolling, I don't see anything that really lines up with any of the other strikes too neatly out here. Maybe Wednesday. Could have seen maybe rolling the 3/4 to the 3 halves, because about 18, almost 19,000 trading on Wednesday. Again, they were slightly opening, only slightly opening, so they could have been taking most of those off. And then rolling, we saw about 19,000 going up of the 3 halves on Wednesday. So potential roll up there. That does make some sense. But the rest of it, Dan, I don't know, all over the place, back and forth. I'm guessing you're a little bit more down with the 3/4 in December than you are with the 3 halves, or certainly the 4s, sir.
Well, here's what's interesting about that. And first, yes, I would be, because we want to remember just 2 days ago, this market was trading at 3. $3 has been a cap on this market for a while, and we basically have been in a sideways mode. If you look at the prior week. And so just 2 days ago, we're at 3. So 3.25, that's still a healthy jump. And we did that yesterday in that market. We went from 3, to about 323. So we got very close to that. So that one, though, it's still a big jump. but that was a little more reasonable than the other 3.5, 4. The 4 is still beyond my belief, but we'll see what happens here.
Watch, next week we'll bring you back on, Dan, and we'll 4.25, bam, and they're laughing all the way to the bank again at us, Mr. Dan.
But did it happen within the next 4 days? Now, one thing you could say, we've gone 35 cents in just 2 days. So the 3.5, is that possible? 15 cents? Yeah, still a healthy move for Nat Gas. But no, we'll see, Mark. We'll see.
We shall see. Well, people are looking to the other direction as well, listeners. The puts are not exactly sleepy this week. The most active put, we have the 2 3/4 puts, also in December, going up 36,500 times this week. About half of that going up on Wednesday, nearly 17,000 contracts, slightly closing there. So maybe some folks bailing on those and looking for some other strikes that I don't see any obvious rolling candidates there. So maybe they're just getting the heck out of Dodge. We saw about 8,500 on Tuesday, mostly opening there, 7,000 almost on Monday, slightly opening, and about 4,100 today against an OI of 28,000. And then behind that, we have the 2 half puts going up about 30, almost 31,000 times this week. So not all upside all the time, just mostly upside, listeners. The big day for these, about Tuesday, 12, almost 13,000 going up on Tuesday. Mostly opening there, then about 11,600 on Monday, slightly closing there. So back and forth on the 2 half puts. 3,200 yesterday, about 3,200 again today against an OI of, get this, 50,000. So there's still size open, Dan, with about 4 days to go on the 2 half puts. That seems like a bit of a bridge too far, but you never know, sir. You like any of these puts maybe better than the calls, sir?
No, I'd stay on the call side. I don't think we have the fundamentals or the price action right now to get too excited about the puts. I could see us going sideways in the next week. That would be possible. But a break like that, I think that'd be a bit of a stretch too.
If you're asking what's going up beyond 4 days, listeners, which again, nearly 50% of the paper going out in 4 days, but we do have mostly puts there as well. We have the 2 half puts in January going up about 31,000 times this week. The big day for those today, about 12, almost 13,000 against an OI of 31,000. So folks maybe getting a little bit of their hedge/fade on in January. By the way, the Jan contract, 345 that future, so even richer. So the 2 half puts nearly $1 out of the money, yet going up about 31,000 times out here this week. And also saw some puts, 2 half puts going up in May of next year, about 13,000 of those. That makes a little more sense. The future there is only $3, so that's starting to get into the seasonally light period. So there we go, and we have our usual weirdo put strips, 3.5 puts, and a lot less size this week, which is kind of interesting. So yeah, if you're not interested in 4 days to go, listeners, I don't know what to tell you. That's where the lion's share of the action is out there. Mr. Dan, do you want to stay in energy, do WTI, or head on to another product? I'll let you choose, sir.
Well, let's take a look at WTI.
All right, listeners.
Crude's interesting setup right now.
Let's go out to WTI. A lot of talk about it over there. Of course, we've been saying for a while that folks have been whistling past the graveyard when it comes to energy and energy vol in particular. Is that still the case right now? Pop out a Nat Gas, going to go up a couple of slots to crude oil, then select WTI. If you did that, you'll see we're pretty much exactly at a 70 handle as we're kicking off the show. 70.11 coming into the start of the show here. That puts us up about 3.2 handles on the week, nearly 5%. Of course, if you go back to the end of our show last week, and WTI is a little bit lower. It'd probably be, looks like it'd be at a 2, 4, about number 10 or close to it, below heating oil and silver, up about 1.5% from our show last week. So a little bit of fluctuation, obviously, in WTI, but a good week coming on from Monday here. Is it a hot week on the options front? It's about back to what we expect out there, 446,000, which is kind of interesting. Obviously, things kind of heating up out there again, potentially, in terms of, war crimes charges being leveled against the Prime Minister of Israel out there. And then, of course, but maybe also a détente with them and their targets there to the north. So a lot going on in that region that could potentially complicate the energy scene going forward. Mr. Dan, what's catching your eye in WTI, sir?
Well, today reflects the news that you just mentioned. That the uncertainty is part of the driver we're seeing in crude oil. And we've also seen some things in crude in terms of drawdown. If you look at what we have in storage, and something that's oftentimes not really looked at too much, but it's the crude that we have that's being stored on water. So it's crude, people will lease a tanker, put crude in it, and it becomes a storage vessel for them. And if you look at what we have in crude right now, on water, in tankers, it's down 14% to around 50.97 million barrels. So that's been backed off a bit. So not super big difference globally in terms of crude, but it is maybe a sign of tightness potential in this market. We basically have been range bound in crude, 67 to 73 or so in that market. And I look for that to continue. Do we have uncertainty? Yes. And we want to remember the dollar has influence here. So is the dollar stronger, weaker? That has an influence. And when I say that, the reason for it is this trades in dollars. And if I produce crude oil, I go to my bank to sell those dollars I just got from my crude, and I get my local currency. If dollar is stronger, I get more of my currency. If the dollar is weaker, I get less of my currency. So typically, that market, in this case crude, will compensate for that. If the dollar is weaker, crude oil prices have a tendency to go up. And here we're seeing it up, and the dollar is actually holding its own. It's strong. So it's an interesting dynamic. I think we want to remember that. Also, we're coming into a time at the end of the week. What's going to be an important level here, I think, is around that $71 level. Do we close above that going into the weekend? And if buyers are here, if this is true, then what we ideally want to see technically is we want to close above $73 within the next 3 days next week. So by Wednesday of next week, we would want to be trading above 73 if you have a long bias in this market. So I think it's an interesting setup. And the potential for a move here is there. It's just how committed are these buyers to this?
Let's see how committed they are right now, Mr. Dan. Like we said, not lighting the world on fire from a volume perspective. Of that little over 400, about 450,000 contracts, almost a half, about 47.3% going up in the Jan contract. Has about 25 days to go, so we'll hang out there. A little bit longer term than what we were just talking about in Nat Gas. Very fixated on the near term there in Nat Gas. That future right now still hanging out at about a 70.11. The vol in WTI coming in quite a bit, coming in about 1.25 points, 30 and a third out there right now, which is kind of interesting given what we were just saying, that energy vol is actually topping our CVOL list out there this week. So obviously Nat Gas kind of overwhelming what's going on a little bit longer term in WTI. Understandable. Nat Gas, a bit of a volatility beast. Skew-wise, 2.6% rich were the puts last week, 5.7% this week. So puts catching a bid, Mr. Dan. And the calls, 0.2% cheap, so pretty much flat last week. And this week, 1.4% cheap. So nobody wants the calls, and the puts are bid. Looks kind of like an equity. And speaking of calls, it was the 75 calls that were leading the dance out there this week, Mr. Dan, to the tune of about 22,000. And again, I said that future at about a 70 exactly right now, so about $5 out of the money calls. The big day for these was Tuesday, about 7,700 going up on Tuesday, 5,600 on Wednesday, and about 4,400 to 4,200 each Monday and today. It looks like back and forth opening to closing. The OI on this strike today is about 16,000, so it's anyone's guess what they were up to on these calls today. Looking here, it doesn't seem like they're rolling to the 80s. They've taken them off. They're not going up because there's not much going up on the 80 strike this week, about only 8,900 contracts, and it doesn't really line up anywhere any of these days. So if they're rolling there, they took a bloodbath and they only don't have much money left to reestablish on the 80s. I don't know, Dan, 75s in Jan, about 5 handles out of the money, about 25 days to go. Are you a fan of those, sir?
Well, is that possible? Yes. That's enough time to see this market move. I'm just not sure about the fundamental drivers to really make it move. We've had a lot of uncertainty over the last few weeks when it comes to this market and geopolitical events, but we haven't really seen crude respond to it. And we want to remember, too, what's been fascinating is how energy markets globally have been transformed. Remember just a few years ago or 1,000 days ago, when Russia invaded Ukraine? Energy was such an issue. Nat Gas was such an issue, especially for Germany. They relied totally on Russia. So, oh my gosh, now what? Well, now what is we've seen a redistribution of energy. Does Russia now stop selling energy? No. Do they sell crude? Yes. China, India, big customers. And what's also interesting is they're not doing it in dollars. Let's do it in rupees. Let's do it in rubles. You know, that whole idea of dollar-based crude oil, just to give a little background, started in the 70s. I think it was 1974. And it was Nixon. He went to Saudi Arabia and he said, we're going to buy crude oil from you. I think it was 74. We're going to buy crude oil from you and we will pay for it in dollars. Saudi Arabia said, okie doke, we'll trade it in dollars. That became the benchmark, dollars for crude oil. Saudi Arabia now is willing to make a transaction in other than the dollar. So if you're now Russia, you sell crude oil to these other countries, you make transactions in other currencies, maybe even gold, which is why central banks have been buying so much gold. It's another form of making a transaction. So we are seeing a shift. We're seeing a shift theoretically away from the dollar. We're seeing a shift in terms of how crude oil moves. Here's the tricky bit, though, Mark. Let's say I'm Russia. I sell crude oil to Uzbekistan. Uzbekistan takes the crude oil and they sell it to United States. Can we buy crude oil from them? Yeah. Is it Uzbeki crude oil? Actually, no, it's from Russia. And once that crude oil becomes refined, tracking where it came from and how it got there becomes very, very difficult. So we can have tariffs, we can have sanctions, but there is a way to dance around those, and I think we want to keep that in mind too. So the energy market really has been fascinating in terms of how it's shifted. Global consumption is actually up a little bit. We're over 100 million barrels a day. I think we're closer to 125 million barrels a day. United States consumes 25% of that big chunk of daily production. We produce around 13 million barrels. We need around 25 million barrels. Our number one customer to buy crude oil from is Canada. Mexico, number 2, Saudi Arabia, number 3. So it's a market that fascinates me in terms of how it's changed, how it's morphed, the impact of how it's responding to these global issues that we're talking about, not as dramatically as people expected. And that's why 75 doesn't seem out of the realm of possibilities. Could crude oil cover that distance? Yes. Has it done that kind of move in about 4 or 5 days before? Yes. Will it do it now? That's where it goes down to about 50-50 from my point of view, based upon these factors that we're talking about.
Speaking of those factors, let's see if you want a little bit of downside in your crude listeners. The Jan 65 puts lighting it up this week as well to the tune of about 16,500 this week. And looks like they're kind of evenly spread out, even though close to half, about 8,000 going up today, 7,600 to be precise. That's against an OI of about 11,000. So they could be coming for the rest of those out there right now. About 4,000 on Tuesday, slightly opening. 3,200 on Monday, slightly closing. About 1,500 on Tuesday, slightly closing. You know, Dan, that 65 strike is kind of interesting. A lot of people have come on the show over the last couple of months talking about WTI and saying they get a little spooked if we start threatening that 65 strike. If we break through 65, some people are thinking maybe it's look out below. Are you a believer in that scenario, sir? If we blow through 65, is it anyone's guess where we stop next, sir? Or is that kind of just speculation and hearsay?
Well, no, I don't think that's an unreasonable number from a technical point of view. And the reason is from 65, 66, 67, we've been very consistent in terms of buying, finding buyers at those levels for a number of months. And so that's a very logical level to look at. If we do break below it, I don't really see a dramatic drop there. Lower prices then, yes, because it changes the dynamic once we get down to that level. We want to remember, too, there's a lot of oil producers that are happy at 70. They're going to be unhappy at 65. So, yes, that's a logical level to the downside. Not surprising to see the puts heavy at that level. That would be a logical move for this market, especially the way it's behaved over the last 6 months or so.
Well, Mr. Dan, we've already talked a lot of energy. We've done a lot of the show already on energy. You've probably got time for one or two more products here.
Oh, yeah.
Where do you want to head next, sir?
Well, it seems like we should take a look at equities. Huh? Shall we take a look at those markets and see what's going on? Or if you have something else you'd like to look at, we could do that as well.
I just pulled up crypto. I would love to talk Bitcoin, listeners, but
sure.
There's not a ton of paper out here. About 2,000 of the big contracts have gone up this week, and about 3,500 of the micro Bitcoin. So you think in a week when we're threatening 100K, they see a little bit more paper, but not a ton to sink our teeth into, Dan. So all you crypto haters, don't come at me. It's not my fault. Tune into the crypto rundown if you want a deep dive on all things Bitcoin and maybe how Bitcoin is stacking up versus ETH right now, and also how Solana is fitting into that mix. Kind of a fascinating conversation. We just went deep on that on the crypto rundown on Monday. So head over there if you want a deeper look into all things Bitcoin and crypto. But Mr. Dan, if you want to head into equities, then away we go.
It's time to explore the volatility swings, skew changes, and hot options trades in your favorite indices. It's time to talk equities.
All right, everybody, welcome to the equities. If you're wondering how the equities stack up this week, we had the Russell 2000 net on the show up a little over 1% out there. The Dow actually kind of unched on the week, which is kind of interesting. The NASDAQ giving up about 1%, and the S&P off about 0.25%, so kind of vacillating around that middle tier to unched level for a lot of the equities out there. But Mr. Dan, obviously a lot of folks are fixating on the equity markets. We had, of course, the big earnings announcement last night, which is NVIDIA. Remember, people look at that as, of course, a bellwether for where the market is going, especially with so much capital tied up in the AI space. It was a kind of seemingly a controversial announcement. The stock bounced all over the place in the after hours. We came in to start the day looking red, and vol was getting a little bit frothy. And then as the day has progressed, we saw the markets kind of claw their way back into the green, looking firmer in the green right now. Interestingly enough, though, vol still remaining kind of frothy out there right now. So maybe showing us that there's perhaps another shoe left to drop. What's catching your eye in the equities, sir?
Well, I think NVIDIA, if you look at their third quarter, it wasn't too bad in terms of their outlook. But it was the fourth quarter that people seem to be concerned about. What does that say about the future in terms of their sales? What's fascinating, too, is how the market responds to a company that does, let's say, well. So if it's up 10% and they say, well, you should have been up 10.5%, that's the whisper number. We're going to penalize you for that. And we're seeing a stock that kind of fits that mold. So even if they do well, it may not be well enough. And I think that's part of what's growing around that type of move. But when it comes to the stock indices, we're seeing markets that are having a fairly confident day is the way I would look at it. What we've seen in the S&P for the last, 4 days, they bought the break. And it's what I look at from a technical point of view. It's what I call behavioral Japanese candles. It's not a pattern approach. It's more a behavior approach of what is this chart showing us? What are the clues that you and I can look at? And for the last 4 days, they've been buying the break. So when it goes down, they buy it. The issue, as I talked about yesterday, was, do we get follow through? It's one thing to see buyers coming in, but do they follow through? Well, so far today, we're seeing that. The S&P is clean at this point. We're not done yet for the day, but at this point, it's clean. It's trading right at its high. It's not backing off. It shows a sign of confidence. It implies a strong close tomorrow going into the weekend. The big objective for the S&P, and that would be, by Wednesday or so of next week, would be to get a close above 6,050 to 60 in that range. If we look at the NASDAQ market, that's another one not as confident as the S&P. But it is moving up, and they have been buying the break. The issue now, the big challenge here for that market would be to get a close above 21,000. If we can get that by the close of the week, by tomorrow, that would be a very powerful sign going into the weekend. But, the market that I really find interesting also is the Dow. And it's because it's a unique animal when it comes to the indices. The S&P and the NASDAQ are capitalization index in terms of how they're calculated. So they take the price of the stock times the number of shares outstanding, and that number, capitalization number, determines the influence of that stock on the index. Well, and we see it in those two, especially with technology stocks. The Dow is an arithmetic index, so it doesn't necessarily march to the beat of the drum of the other two indices. But today, it's looking pretty good. And if the objective here by Wednesday of next week would be a close above 44,650, that's where you'd want to see this market trading. Today, it's a sign of confidence. So far, it's also clean. It's trading near its high. The near-term objective, ideally today, would be to close above 44,285. That would really be a healthy move for this market. I do look for follow through on Friday. I don't look for as big a move as we're seeing right now, and I feel the same way about the S&P and the NASDAQ. An up day, yes. Smaller range day is the expectation. But check out our friend, Mr. Russell. It also got ignited today. It's one of the more confident moves that we've seen in this market. But, Mark, it's the next 3 to 4 days that it's going to be important for this market. We need to be back above those previous highs. That 2460 is where we'd want to be by Wednesday or Thursday of next week, if indeed buyers are here. We want it to go out the way it came in, and that's what I look for in this market. So I do look for follow through. I don't expect a big day tomorrow in that market. So all of them kind of have a similar setup in a sense, with the S&P, I think, kind of leading the way.
All right, listeners, and as Dan was talking, I was just going through the flow, and it's our usual suspects out here in the E-mini, listeners. It's a decent week, not the most explosive we've seen in the E-mini, but pretty decent, 3.2 million contracts on the tape, and as you expect, the lion's share of that going up and far out of the money puts with about a day or 2 days to go out there. So rather than parse that, I know you folks have some questions and comments. I want to get Dan's thoughts. So with what little time we have, let's get into a little bit of your futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/theoptionsinsider, stocktwits.com/optionsinsider, or via questions@theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's MIXLR.com.
All right, everybody, let's get down to business. Dan, while you were talking, we put up a fun flash poll for our audience. Going back to WTI, we said those Jan 75 calls lighting up the tape this week. Quite a few of them, over 20,000, had traded at prices around 65 cents. We said, Dan, with WTI around $70, are you a buyer or a seller of those calls? Dan, which way do you think our audience is going?
Ooh. Well, if I'm saying buying, they may be saying selling. And that'd be fine because that's what makes a market. I would say they're a seller, not a buyer.
You would be correct, sir. But ever so barely, just ticked 60% right now saying they want to sell those calls. 40% say they want to buy them. Obviously, it just went live. This is going to be a flash poll, listeners, just during pretty much the run of the show. So if you're listening on podcast, you're out of luck. That's why you got to be checking out at options throughout the day over there on the old Twitters. Speaking of crypto, listeners, we had a question, a flash poll from our crypto show earlier this week, asking you quite simply, which digital asset has more upside over the coming year? Ethereum or Solana? That's a pretty hot battle right now. ETH was the darling of the crypto space for a long time. Seems like it's cooling a little bit now. Solana getting the bit in its teeth. ETH kind of flat to actually down earlier this week while Solana was on the rampage. So interesting times out there. Our audience pretty much equally split on that one as well, around 50% each for ETH and Solana. You can't make up your mind, which again, like Dan said, is what makes up a market. And Dan, speaking of digital assets, we got a question here for you from Frank. Frank just wants to know, what are your thoughts regarding Bitcoin being the 7th biggest asset in the world, Mr. Dan? What are your thoughts?
Frank, a very interesting question. Wouldn't surprise me, to be honest with you, for a couple of reasons. One, this is a market moving on anticipation. It's not moving on supply and demand. It is moving on perception. And the feeling is that the Trump administration is going to be friendly towards crypto markets in general. I think that helps fuel that anticipation. That's why that 100,000 is not really out of the realm. It will be interesting to see if we get up there, how we behave. Does it close through it, or does it trade it, kiss it, and back off? That would be more typical, by the way. Doesn't mean it's going to change direction, but that would be a typical movement. But as far as being the 7th largest market, I got to tell you, I find that really interesting. It's hard for me to imagine that this market would fit what you're saying, Frank. But the issue is you can't say that's not possible because it is a market moving on not fundamentals, but on perception. And perception is incredibly powerful. And for this to take off, beyond where we are right now, I don't think is an impossible expectation for this market.
All right, Mr. Dan, we'll have to leave it there. But before we go, if folks have more questions like Frank, they want to reach out to you directly, Mr. Dan, where should they go? What should they do?
Well, I do have a website, dangramza.com. I do a free daily video. It looks at 22 different markets. I pulled different ones out there, 6 different sectors. We look at it every day. It's a couple minutes. There's a course there and also a deeper dive into the markets as well. But it's free videos viewed in over 150 countries. And if you've never looked at futures, a place you might want to start is just watch them. And there you can see how do these things behave. You also see red and green lines. Those green lines represent buy levels. From my point of view, the red line represents sellers. A dashed line means that happened earlier in the week. Not suggesting these are buy and sell signals, but just ideas that I want to share so people get a feel for how these markets move. So that may be a spot to get some additional information.
There you go. Check him out there. Listeners, if you don't know how to spell his name by now, A, you should, and B, it's just Dan Gramza, Gramza. All one word, dangramza.com, the place to go to kick the tires and light the fires. While you're searching for fun futures and futures options info online, you know where to go, cmegroup.com/TWIFO. If you haven't made an account there by now, then what the heck are you doing? Awesome free stuff waiting there for you. If you enjoy the reports, I did catch up with Mr. Nick, the creator of those reports for you over there at the FIA Expo this week. Said they're working on some cool new stuff over there. Quite a few of you are taking advantage of the free tools, and they love that there. If you want to go deeper into these markets, bantix.com, BANTIX.com, the place to go to kick the tires and light the fires. Sign up for a free demo of the Pro. You'll see all the crazy tools that we really don't even have time to scratch the surface of on the show. The block trades, the pace of the roll, the futures, all the crazy skew, the quick skew. You can go deeper into that. That's almost worth the price of admission right there, that quick skew tool. Bantix.com, the place to go to check that out. It's going to do it for us on the network today. Back again tomorrow, noon Central, 1 p.m. Eastern, to talk what else? Vol. It's Vol Views time tomorrow. I should be joined once again by the once future and present Dr. Vix. And who else? Got to tune in to find out. Should be a fun one. After that, I will be joined by the options guy himself, Mr. Brian Overby, to talk some weird, wild, and unusual options activity. We'll see what trades he's bringing to the table. You can find out for yourselves. TheOptionsInsider.com/pro, the place to go to learn more. Then we're off for the weekend. Unless you're trading crypto, then you're glued to your screens all weekend long, and futures, of course, as well. We'll see you back here on Monday for the option block, all the way through to next Thursday, another episode of This Week in Futures Options. Stay safe out there, everybody.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.